Hey everyone, and welcome to this explainer. Today, we're decoding the ultimate smart money concepts market structure strategy. Literally, this is the exact blueprint designed to help you finally get funded this year. Look, if you've been struggling to pass those prop firm challenges, or honestly, if you're just craving some real consistency, you are exactly where you need to be right now.
So let's talk about the biggest mistake traders make over and over again. It's misidentifying the market direction. I mean, you've probably been there, right? Staring at a chart completely frozen by analysis paralysis, just wondering, is this move a breakout or is it a trap? Well, today we are going to eliminate that confusion entirely with a totally mechanical, strictly rule-based approach.
Here is exactly how we're going to build this system together. We'll quickly run through the market direction problem, realistic market structure, how to spot real pullbacks, fractal market mechanics, and finally, the 1 to 5 trading strategy.
Okay, let's jump right into part 1, the market direction problem.
We have to start with a foundational issue here. Why the stuff you've likely been taught online is actively getting you stopped out. Really, it all comes down to a pretty simple contrast. Textbooks always show you these beautiful, clean waves forming perfect higher highs and higher lows. It looks so easy. But live charts, yeah, they are full of messy internal noise. When the price just zigs and zags internally, amateur traders tend to jump in way too early, and they just get liquidated the second the true trend continues.
Which brings us to part 2, realistic market structure. To actually survive those chaotic, realistic market conditions, we need strict, rigid definitions. That way, we never get faked out by all that internal noise again. So let's establish our very first rule, the break of structure, or BOS. This happens when the price confirms the current trend by breaking and actually closing past the most recent swing high or swing low. Think of a BOS like a green traffic light. If we're breaking lows, we stay bearish and we only look for shorts. It's basically our continuous confirmation to just stay the course.
But you might be wondering, when does the trend actually die? Well, that brings us to our change of character, or CHoCH. This is a precise shift in trend direction, and it only happens when the specific swing point that created the most recent high or low is broken. The key here is that we don't guess when the market will turn. Absolutely not. We wait for this exact mechanical shift to flip our bias.
All right, let's move on to part 3, spotting real pullbacks.
Ask yourself, how many times have you bought a pullback only to watch the price absolutely crash through your stop loss? Ouch, right? You've probably lived this exact frustration. You see the price retrace slightly, you assume a new low is in, you hit buy, and bam, the price plummets right through your stop. And why does this happen? Usually, it's because you didn't have a solid mechanical rule to validate if that pullback was even real to begin with.
But we're going to fix this forever, because after backtesting thousands and thousands of candlesticks, the source material reveals that confirming a valid pullback actually comes down to one single magic number, and that number is 3.
Here is exactly how this magic rule of 3 works. First things first, you wait for a clear break of structure. Next, you absolutely must see 3 consecutive opposite candles closing successively. For example, if you're looking for a pullback in a bullish trend, you need 3 bearish candles closing lower and lower. Only then is that swing low actually confirmed and protected. Anything less than 3, it's just a fake pullback. It's a trap waiting to happen, so don't fall for it.
Moving right along to section 4, fractal market mechanics.
Now, if you want to get those really tiny stop losses and massive risk-to-reward ratios, you have to use multiple time frames. It's just non-negotiable. Basically, the 15-minute chart acts as our macro compass. It provides our structural bias and defines the overall trading range we're working in. Meanwhile, the 1-minute chart, that's our X-ray vision. It literally lets us peek inside that 15-minute leg so we can pinpoint the exact moment of reversal for a perfect sniper entry.
And this dynamic creates what we call the 1-minute shift. When the 15-minute chart pulls back and is getting ready to reverse, the 1-minute chart will almost always show a change of character first. Think about that for a second. You are literally being warned of a macro reversal before it even happens on the larger chart. That gives you an absolute institutional edge to get in right as the momentum builds.
Which leads us perfectly into section 5, the 1 to 5 trading strategy.
Okay, let's tie all of this together and apply it to a real GBP/USD chart using a strict mechanical checklist. Step 1, trade strictly during the high-volume London session. Step 2, wait for the liquidation of the Asia session. This just means we let the market sweep past those old, quiet overnight highs and lows to trap the early traders.
Step 3. Confirm your reversal with that 1-minute change of character we just talked about. And finally, Step 4. Execute your entry on a refined 5-minute order block. That's essentially the last institutional footprint left behind before a massive push. Following this exact checklist on a recent Tuesday gave a completely flawless, super low drawdown entry right after the liquidity sweep.
Now, when it comes to managing your risk, you're going to place your stop loss safely below your newly protected low. In this specific example, that was a tiny 5.2 pips. Then you target the 15-minute structural high. And the beautiful thing is, because we trusted our 3-candle rule, we can be highly confident that our low is mathematically protected.
That kind of pinpoint accuracy unlocks an incredible 1-to-5 risk-to-reward ratio. To put that into perspective, it means a single winning trade covers 5 losses. Seriously, you really don't need a crazy high win rate to be successful. You just need a system where your winners mathematically crush your losers every single time.
So I challenge you to take this blueprint and go open your charts. The market is constantly trying to trick us with fake pullbacks and messy internal noise. So the only question left to ask yourself is this: will you let the market keep stopping you out, or are you going to demand that magic 3-candle confirmation before you risk another hard-earned dollar? Thanks so much for joining me on this explainer. Now get out there, go test this strategy, and take back your edge.